Everyone is talking about artificial intelligence. Some are talking about crypto. Others are chasing the next big tech stock. But very few investors are paying attention to something far more fundamental. Energy, not trendy green startups, not speculative battery companies, but energy infrastructure, the systems that power everything. Because in 2026, one thing is becoming very clear. The world is using more electricity than ever before, and that demand is accelerating. In this video, I'll explain why energy infrastructure could be one of the most overlooked long-term investments for 2026 and beyond. The hidden foundation of everything. Every major technological shift requires power. AI data centers require massive electricity. Electric vehicles require charging infrastructure. Factories, cloud computing, robotics, and automation all require stable grids. The more digital the world becomes, the more physical infrastructure it needs. You cannot run advanced AI models without data centers. You cannot operate data centers without energy. You cannot distribute energy without transmission infrastructure. The foundation of modern growth is electricity, and electricity demand is rising globally. Why? 2026 matters. Over the next few years, several trends are converging. First, AI expansion. Training large AI models consumes enormous power. Data centers are being built at record speed. Second, electric vehicle adoption continues to grow. Each EV increases demand on local grids. Third, industrial electrification is accelerating. Countries are investing in reshoring manufacturing, and all of this requires reliable energy infrastructure. Governments are now allocating billions toward grid upgrades and modernization. This is not speculation. This is policy-backed structural change. What is energy infrastructure? Energy infrastructure includes power generation facilities, transmission lines, electric grids, natural gas pipelines, nuclear plants, utility providers. It's a backbone that allows electricity to move from where it's generated to where it's consumed. Most people ignore this sector because it sounds boring, but boring sectors often produce stable, long-term returns. The case for grid modernization. In many countries, the electric grid is outdated. Some systems were built decades ago, but modern demand looks very different. More renewables, more decentralized energy, more peak usage from EV charging, more demand from data centers. Upgrading the grid requires capital, and companies involved in grid modernization may benefit from a long-term infrastructure spending. This is not a short-term trade, it's a structural trend. The role of nuclear and natural gas. There's another important angle. As electricity demand rises, stable baseload power becomes critical. Renewables are important, but solar and wind are intermittent. Nuclear energy is being reconsidered in many countries as a clean and stable power source. Natural gas remains a major transitional fuel due to reliability and scalability. Investing in energy infrastructure means understanding the mix. The energy story is not ideological, it's practical. Demand must be met. Why this is different from hype? Unlike speculative sectors, energy infrastructure is tied to necessity. People can reduce app usage. They can switch software platforms. But electricity is non-negotiable. As long as economies grow, energy demand persists. That creates a baseline level of stability that many high-growth sectors lack. This doesn't eliminate volatility, but it changes the nature of risk. No investment is without risk. First, regulatory risk. Utilities and infrastructure companies are heavily regulated. Policy changes can affect profitability. Second, capital intensity. Building and maintaining infrastructure requires large investments. Debt levels matter. Third, economic slowdowns. In recessions, energy demand can temporarily decline. And finally, valuation risk. Even strong sectors can become overpriced. smart investing always requires balance. How to approach this as an investor. If you believe energy infrastructure will benefit from long-term demand growth, you still shouldn't go all in. Diversification matters. Energy infrastructure can be one component of a balanced portfolio. You might consider exposure through utility-focused investments, energy infrastructure funds, broad infrastructure ETFs. The key is position sizing, not over-concentration, participation without excessive risk. Long-term perspective. The next decade will likely be defined by electrification, AI, automation, E versus digitalization. All roads lead back to power. Energy infrastructure is not glamorous. It doesn't trend on social media, but it quietly supports every major innovation. Sometimes the most powerful investments are the ones no one is talking about. In 2026, many investors will chase headlines. They'll search for the next explosive stock, but long-term wealth is often built by identifying structural shifts early. Energy infrastructure represents a fundamental layer of global economic expansion. It powers AI, it powers industry, it powers transportation, and it powers the digital future. The question isn't whether the world will need more energy. The question is who will benefit from supplying it. Invest smart. Think long term.